Looking for a cheap, under-the-radar stock? Want a yield near 4% backed by a double-digit long-term dividend growth rate? Would you like to know about a dividend growth stock that I've recently been buying? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, if you want exclusive access to my personal six-figure stock portfolio and alerts on any new investments I make, check out the Patreon link in the description below. 2022 is quickly becoming historic. There have only been 3 worst periods for the market in all of history: the Great Depression, the dot-com bust, and the global financial crisis. Ominous company. Or is it? Look, if you're older and looking to sell your stocks to produce income in retirement, 2022 is a bummer. But for almost everyone else out there, especially long-term dividend growth investors who are still actively buying stocks, building wealth and passive income, and trying to achieve financial independence, this is a gift. A big reason for this is the way in which price and yield are inversely correlated. All else equal, lower prices result in higher yields. It's more passive dividend income on the same invested dollar. For anyone who is looking to live off of passive dividend income, this is exactly what you want. You get your hands on more passive dividend income and march toward financial freedom that much faster. I always see short-term volatility as a long-term opportunity, and I have been taking advantage, investing thousands of dollars per month and buying up dividend growth stocks left and right. Well, there's one stock in particular that I think you should know about. Today, I want to tell you about a dividend growth stock that I have recently been buying. Ready? Let's dig in. So what is this under-the-radar dividend growth stock that I've recently been buying for the Fire Fund? It's Lincoln National Corporation, stock ticker LNC. Lincoln National is a financial services company with a market cap of $8 billion. This company provides a range of insurance, annuity, and retirement plan services. I love companies that provide financial services like this. You have an asset-light business model that can generate a lot of recurring revenue without high fixed costs. Revenue can keep going up, yet costs can be easily contained. It's a great recipe for long-term growth and returns. How long-term is long-term? Well, Lincoln National was founded in 1905. Is more than a century of doing business long-term enough? I think so. Moreover, there are no signs of stopping here. It's actually the opposite. The company continues to grow right across the board. It's not blowing the doors off or anything, but numbers continue to march higher. The company has compounded its revenue at an annual rate of 5.9% over the last decade, while earnings per share has a compound annual growth rate of 5.6% over that time frame. Now, to be fair, fiscal year 2012 was a great year and last fiscal year wasn't. So I think the company is capable of doing better than this. Still, mid-single digit top line and bottom line growth isn't bad at all. But here's what's really exciting. CFRA is forecasting that Lincoln National will compound its earnings per share at an annual rate of 21% over the next 3 years, citing product enhancements, distribution improvements, price hikes, and productivity gains. We invest in where a company is going, not where it's been. Well, I like where the company could be going, as CFRA's forecast would represent a material acceleration in growth for the company. Even if they fall short of this, though, we're still looking at very strong growth potential. Along with that strong growth potential comes strong dividend metrics. The company has increased its dividend for 13 consecutive years, which is a great start. But the yield of 3.8% might be the star of the show here. With a near 4% yield, you don't need super high growth in order to make sense of the investment. If they can grow the dividend at a 6% to 7% clip annually, I'd be pretty happy. But I'm even happier. The 10-year dividend growth rate of 20.9% is well in excess of that mark, although more recent dividend increases have been in the 6% to 7% range. Circling back around to that aforementioned yield for just a second though, the 3.8% yield is a full 100 basis points higher than its own 5-year average. This stock does not typically offer a yield this high, but this is the kind of gift that 2022 has given us. And with a payout ratio of 25.5% based on trailing 12 months adjusted earnings per share, this outsized dividend is easily covered. One of the things to like most about Lincoln National is the core business model. It revolves heavily around insurance. I've waxed ecstatic about insurance numerous times before, largely because of the power of the float. This is the low-cost source of capital that accrues as a natural course of doing business due to the time delay between collecting premiums and paying out on claims. The float is a prime example of making money from other people's money. It's a big part of why Warren Buffett has been so enamored with the insurance space for a large part of his life. Lincoln National has been ultra cautious with investing its float, with the majority of the portfolio in fixed maturity securities. 97% of the company's investments are investment grade rated. It's worth noting here that rising rates should benefit the firm as they invest new capital into higher yielding offerings, yet they've been putting up respectable numbers without that benefit. This is just a solid business right across the board. Profitability is really good considering the industry. Over the last 5 years, the firm has averaged annual net margin of 7.7% and annual return on equity of 7.4%. We have a rock solid balance sheet here. The long-term debt to equity ratio is just 0.3. Also, the company has been a prolific repurchaser of its own shares, reducing the outstanding share count by a whopping 34% over the last decade. Best of all, the stock looks cheap. We're talking about a price earnings ratio of 6.9 based on trailing 12 months adjusted earnings per share. The forward PE ratio is only 5.6. These are jaw-dropping numbers. I understand that this stock typically has an undemanding valuation. The 5-year average PE ratio is 11.6, but we are in unreal territory here. The company is almost being given away. Adjusted book value is $79.49 per share. It's priced at nearly half of that right now. If CFRA's near-term earnings per share growth forecast is anywhere near accurate, the PEG ratio here is somewhere around 0.3. That's among the lowest I've ever seen. Want additional perspective on how cheap it looks? Okay, Morningstar doesn't track this name, but CFRA has a 12-month target price of $54 on the stock. In my view, that's a pretty conservative take on it, but that's still 13% upside from the current pricing as I shoot this video. And you're collecting that nice yield along the way. There's a lot to like about that kind of setup. Could the stock go lower? Sure, cheap can always get cheaper, but I see a very asymmetric relationship between downside and upside here, with the potential of the latter far exceeding the potential of the former. The stock is already down 30% year to date, and I think most of the work has already been done in terms of wringing out any possible excess in the valuation. All of this is why I initiated a position in Lincoln National and continue to buy it. I initiated the Fire Fund's position in Lincoln National on September 16th at $47.48 per share. I've added to the position since then, with the lowest cost per share coming on September 27th at $43.18 per share. Of course, I alerted my patrons over at Patreon about those moves right after they occurred, and I plan to continue buying the stock in October and November, dollar cost averaging my way into the position, and I'll be alerting my patrons over at Patreon about those moves and all other moves I'm making. Is this stock right for your portfolio? As always, that's up to you. It's your call, but I think Lincoln National offers much to like and little to dislike for long-term dividend growth investors. It's certainly not a business that, I'd bet the whole farm on, but the solid fundamentals, near 4% yield, clear commitment to dividend growth, and super low valuation at least warrants an investor's attention, if not some of their capital. Thanks so much for watching. Hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about this dividend growth stock that I've recently been buying. Please make sure to subscribe to the channel and ring that notification bell so you don't miss out on new content. Also, take a look at the description box below for some important links, including the link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who have been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.